Hello, I'm David Hodgson, Executive Vice President, Portfolio Management at Chesswood, along with Chris Wallbank, Executive Vice President and a member of our portfolio management team. We wanted to take a few minutes to talk about our Canadian Asset-Backed Credit Fund, managed by Waypoint Investment Partners, and how we construct the portfolio, manage liquidity, and our risk management practices. So Chris, could you provide a brief outline on portfolio construction for the fund?
Thank you, David. The portfolio consists of leases and loans originated by the subsidiaries of Chesswood, along with additional opportunities presented in the marketplace for assets where Chesswood has expertise. Our Canadian operations evaluate over 100 million of applications each month using a proprietary credit scorecard to guide consistent analysis and decision-making, allowing them to effectively price for risk. Our servicing and collections teams have experience managing these receivables over several economic cycles. All contracts originated by Chesswood subsidiaries are initially underwritten by the appropriate credit teams. These contracts are then independently evaluated by the portfolio manager for their suitability in the fund. With an average size of under $50,000, these credits are diversified across geographies, industries, equipment types, origination sources, and obligors.
So there's a number of direct lending funds in the marketplace today, yet liquidity has been a drawback to more widespread adoption. Can you talk about this fund's liquidity and payback cadence?
For our contracts, the average term is approximately 48 months, and the monthly payments are fully amortizing, meaning each payment includes both principal repayment and interest. This not only provides underlying liquidity for fund investors of approximately 5% of the net asset value each quarter, but also reduces refinancing risk. Specifically, the principal return in each payment is a natural credit enhancement. This reduces the investor's capital at risk as the loan is paid back each month. In contrast, traditional corporate bonds make semi-annual interest payments and principal is repaid in full at maturity. Furthermore, the monthly payment schedule allows the servicing team to have immediate feedback on the status of each borrower. If a payment is missed, it can be determined in short order whether the collections team needs to begin its standardized enforcement and recovery process. This core group of prime equipment receivables is complemented with higher yielding non-prime automotive loans and prime working capital loans to borrowers with a long-standing history of consistent payments.
Now, Chesswood has considerable experience securitizing assets. Can you explain securitization, our experience in this field, and how it could help the fund?
Securitizing assets is the process whereby financial companies pool certain income-producing assets, which are then assembled and sold to institutional investors. This benefits both the financing companies and their investors. For financing companies, it frees up capital on their balance sheet, which can be used to further grow the business. For investors, they receive a flow of income from a diversified set of assets that back the securities or asset-backed securities. Chesswood has been very active in this market for many years, with over $2 billion in Canadian leases and loans securitized. The core buyer of these asset-backed securities has been primarily financial institutions and large Canadian life insurance companies. Therefore, in addition to the underlying liquidity of 5% per quarter already discussed, we also have the option to securitize, further enhancing liquidity in the case of redemption requests. This is a differentiator among Canadian private credit funds.
Chris, can you take me through the risk management process and the various checks and balances?
The fund's portfolio holds hundreds of individual leases and loans diversified by industry segment, reducing the risk of a large individual loss having a material impact on portfolio performance. And as we discussed, Chesswood subsidiaries have hundreds of team members involved in originating, servicing, and collecting on these loans. Furthermore, our leases and loans are standardized, legally enforceable contracts whereby we have legal recourse to repossess assets in the case of default and resell them to limit the severity of loss on individual contracts. Many of the existing private credit funds in the marketplace today are dealing with larger, more concentrated loans with a much longer path to legal recourse in the event of default.
That's great. Thanks, Chris.